Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for May 14th, 2017. Market breadth. With this past week's market fractional advance, our bull-bear point and figure ratio at 1.29 rose from 1.19 last week, advancing within bullish territory. The total count of securities in bullish or bearish patterns decreased to 3,134. The count of bearish stocks decreased 5%, while the count of stocks in bullish patterns increased 2%. The Pirls P&F Market Breadth Summary chart shows us a market now 26 weeks in bullish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe to the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 39 points for the 14th advance in 20 weeks, forming a new top. At a positive 110.45 points, it continues below all 8 tops above plus 100 and continues above all 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 4 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum, now at a positive 78.92, down from 92.32 last week. The CCI 20 daily uptrend continues. We wait for the CCI 20 daily to return to the plus or minus 50 range for a valid zero-line reject long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 54 weeks ago, while the daily CCI 20 began a Woody's uptrend 25 weeks ago. The CCI 20 weekly has risen to a positive 138.49 from 135.99 last week. We await the return of the CCI 20 weekly to the plus or minus 50 range for another potential trade. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: gold and silver and some tech on top. Oil services, REITs, brokers, and some tech on the bottom. Bullish: oil services continues in the bottom 5. Semis and computer hardware has entered the top 5. Bearish: REITs continues in the bottom 5. Networkers has entered the bottom 5. Brokers, CompTech, and S&P Retail have left the top 5. Gold and silver has left the bottom 5 and entered the top 5. Focus this week from www.actingman.com. How to stick it to your banker, the Federal Reserve, and the whole doggone fiat money system. The following are some key points. With respect to the Fed's balance sheet, Bernanke remarked that the Fed should cut it from $4.5 trillion to something in the vicinity of $2.3 to $2.8 trillion. What exactly this would achieve, Bernanke didn't say. As far as we can tell, a balance sheet of $2.8 trillion would still be about 300% higher than it was prior to the 2008 financial crisis. Bernanke, by all measures, is an absolute lunatic. He, more than anyone else, is responsible for the utter mess that radical monetary policies have made of the U.S. economy. He's the one who dropped the federal funds rate to near zero and inflated the Federal Reserve's balance sheet by over 450%. Yet Bernanke walks and talks with no remorse. He even believes his actions somehow saved the economy. In truth, his actions impeded the economy's ability to self-correct and provoked today's asset and debt bubbles. However, with the exception of Lehman Brothers, his efforts did succeed in saving the bankers' bacon. How to stick it to your banker, the Federal Reserve, and the whole doggone fiat money system. If you already own gold or silver, what follows may seem rather elementary. But if you're a wage earner and don't own any precious metals and don't know where to start, here's a practical, elegant way for you to stick it to your banker, the Federal Reserve, and the whole doggone fiat money system. To be clear, we like to keep things really simple. Thus, we've boiled it all down to a simple two-step approach that just about everyone should be able to carry out. Step 1. Go to your nearest ATM and pull out a $20 bill. Step 2. Go down the street to your local coin shop and trade your $20 bill for a 1-ounce silver eagle. Congratulations! What you've just done is trade a dubious debt construct, that is, a Federal Reserve legal tender scrap of fiat scrip, for a debt-free, long-term store of value. Do you feel good about your trade? If so, do it again and again. Thank you for watching this week's Sand to Pirls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Bread Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you have enjoyed a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up. Hoping also that you had an opportunity to honor your mother on Mother's Day, and wishing you true success.